Hey everyone. So here's the other big trade that I had this week. I think on my TikTok video I said about 10%. That's because I failed math through high school. It was actually about 8%. Still, that's close. The ticker symbol is ESPR. Never heard of the company, but this one I believe I saw on FinViz, and it was a stock that was selling off. It was one of their like losers of the day. Um, so we can see here that this stock was trading around $8, and then had this massive red candlestick, lots of selling volume here, and the next day, which was the 3rd. So where did I buy it? I bought it right here into this whole big sell-off. Never heard of this company. Don't know what they do. Don't really care. What appealed to me was this massive sell-off, and even though this isn't a lot of consolidation, what I really liked was how oversold it was. First of all, huge oversold, and second, when you see, this is the moving average convergence divergence. When you see, and I can link to the video that explains really what all of this stuff is. But this is the MACD line, the blue one. This is the signal line. And this is the zero line right here. Now, some people have disagreed with me on TikTok. I've always, when someone disagrees with me, I always go on Investopedia and reread just to make sure I'm right. When the further below the zero line, the more likelihood there is that the stock will rebound. That's what I've read. Someone on TikTok disagreed with me, which is fine. But you can see here that we are way below this zero line. Look at this big sell-off. We have very oversold stock, very far below the zero line, and it looks like it's beginning to curve back around. And this is the 3rd. I bought the stock at $5.37, which would be right around here somewhere. I believe I bought it towards the close of the day. So you know what I normally say is I like to see a lot of sideways consolidation. This time, decided to take a chance, mostly because of how oversold the stock was and how far below the zero line we were, and that I felt like a crossover was coming on the MACD. I picked it up at $5.37, and I did that on December the 3rd, and on December 8th, which was here, I sold it at $5.80. So I bought it at $5.37, and I sold it at $5.80, which was a net gain of about 8%. So let's zoom in and look at the I don't know. I'm on a 20-day chart right now. Okay, this is good. So here's the 3rd where I bought it right towards the close at around $5.37, probably right on this candlestick right here, because it seems like it got up there. So $5.37, somewhere around here is where I purchased the stock. The next day we're already up. One of the things that I liked is that so this is the 200-day moving average, this yellow line. It works as it's a moving average, but it also works as support and resistance. When this the next morning we have a breakout to the upside, even though the volume is super weak, we're also very close to a crossover on the 200-day moving average. Now, when the stock crosses over like it does right here, that is seen as a bullish indicator. Normally, that would be a very strong signal. However, the volume is super, super weak. So in my mind, as I'm watching this, I'm thinking, man, unless we have like a real strong uptick in volume, I'm probably going to exit this trade soon. What we end up seeing is over the next 3 days, and I sold it on the 8th at $5.80, which is right around here somewhere. I exited this position. Now, even though we have 2 back-to-back breakouts, and we are trading over the 200-day moving average, and you can see here that the stock actually uses this 200-day moving average as a support line until it breaks and pushes a little lower. But that's another thing that you could look for, is using these moving averages as support and resistance. Is, does it bounce off of support every time? That can be a positive sign. In other words, it's not going below the support. In this case, though, I didn't have a hunch that it was going to break, but I was a little concerned because the volume was so low that my gut was telling me I better just get out. I'm in at 537. I'm out at 580, which is right around here. And like I was going to say, these two back-to-back breakout to the upside kind of signals are usually very strong. But when you compare it to the volume and you see that it's even already a little bit overbought, I just decided to take my chances and get out. Good thing too, because yesterday, this thing kind of dumped. Now, does that mean I'm done with this trade forever? No. If we go back to, let's say, a 20-day chart, we can draw out our Fibonacci retracements. Now, some people say you do it from the absolute high to the absolute low. Other people say, well, this big red candlestick is an aberration, or the wick rather, this big surge right up to here, and that you shouldn't plot your Fibonacci from here because it's an aberration. You should actually plot it from here. So let's just do it the way some people say to do it. It's really up to you. And you plot it. I right-clicked and I hit Add Drawing. Sorry, I should just walk you through how to do that. So you right-click at the top of the candlestick or the top of the wick, whichever you choose. Add Drawing, and you go down to this little percentage thing, which is the Fibonacci retracements. And then you can drag it to the low, which looks like it was right here. And when you click, it should drop. It doesn't. Below. Below. There it goes. Whoops. Too many clickings. So now we can see that this stock is trading in a range here. What we want to see is it gonna hold support at this 0% line, which is around $4.87, or is it gonna break it? If it breaks to the downside, then we wait for it to get a new low, oversold again. We plot out a new Fibonacci retracement to wherever that low is, and we go from there. If it breaks resistance, which means that it has to go from $5.37 to over $6, then we can consider purchasing the stock again as another trade with all of these lines as potential price targets. Now, just because they are potential doesn't mean that it'll get to $7, $8, and even almost $10. It just gives you an idea of your possible range of potential profits. If I was trading this stock very quickly, keeping in mind that it's over $5, so if I were to buy 1,000 shares, it would cost me around $6,000 if I'm buying it right here. I don't want to tie up $6,000 unless the volume is really, really strong and crossing over like all the key indicators, like this 200-day moving average. You can also see that the MACD is right below the zero line, which even though it indicates a reversal and it shows like one is potentially coming, might not be as strong, especially if the volume is so weak. So I personally, if I'm going to trade this stock again, I need really, really strong, heavy volume, and for it to do all the things that I like crossing over this 200-day moving average, which you can see is on a downward trend. So the closer we get this 200-day moving average to these Bollinger Bands, the higher the likelihood of a breakout to the upside, at which point I would trade it. Would I hold it until $8? Probably not, unless there was really strong volume. And if the markets were overall pretty strong, which they've been kind of back and forth these last few weeks, right? Up 500 points, down 500 points. So I'm probably, if I'm going to trade this again, it's going to be in and out because I don't want to tie up $6,000 for weeks if I don't have to, unless, like I said, there's really strong volume. So I hope you thought this video was helpful. If you did, please shoot me a follow, hit the like, hit the subscribe, hit all the buttons. Thanks for watching, and have a good day.